Good turnaround Tuesday, everybody. How's everyone doing? Hello, James Wilson, Jay Kana. I know Ryan's here. Who else is here? Steven. Alexander, how are you?
Good morning, Dale.
Oh, how you doing, bro?
Good, thanks. Yourself?
Pretty good, Kman.
Are you having like some milder temperatures over there right now?
Yes, thank God.
So you can breathe.
Yeah, and the fires are under control. And now all we get is flash flood warnings. Besides that, everything's calm and copacetic. Anyway, follow through to the upside in euro and yen getting hammered. Where's your head at today, Kman, going into CPI?
Yeah, we spoke about that on the Flow Show as well. There's been a change of sentiment in the past week or so, also helped by the decreasing interest rate differentials of the dollar versus the rest of the currencies, and some medium to longer term players seemingly taking profits, but on long dollar positions, we've seen some articles in Bloomberg as well about some asset managers, hedge funds, thinking about the dollar a bit for now. Will it last is my question, but yes, I can understand the change of sentiment. So looking into the CPI today, I would not be surprised, let's put it that way. I wouldn't be surprised to find more dollar sellers if the number warrants a bit of a lift in the dollar from these levels. But I'm not sure we are already, or we are in a real dollar reversal market yet. But yeah, I understand the sentiment change.
Okay, I'm glad you get it. It's about time, buddy.
Hey, I only studied the markets for 41 years.
I've been very patient with you to finally, sway your opinion, but I'm kidding you. Before we get to more currency stuff, and I want to talk to Ryan, just something, when you've been in the business for a long time and, you forget about how things used to be, with this move that we had in silver. And then I was taking a look at the grains as well. And in the late 70s, they used to trade silver at the board trade. And there was a kind of a linkage between beans and silver. And look at that. So I'm not sure what there was some type of bullish report, but you'll start to see them they're not going to be at the same prices, but you're going to see the same kind of trading patterns between these two. It's like a redux from 1970, late 70s, early 80s. And it was also during a tightening cycle when, Volcker was trying it the first time. And the last thing to peak, I remember I was looking at the screen and people said they're not going to stop till they break corn. And corn was the last thing to break during the draconian interest rate rises by Volcker. So anyway, just something to keep an eye on. Sometimes you get, one will lead the other and it'll give you kind of a clue what the other may do. And, I don't think anyone's talked about the silver soybean relationship in 40 years.
Would that be China? Would China be the link there?
I'm not sure. It was kind of just like they were both inflation hedges and treated that way. And they were both traded on the same floor. So, I guess, kind of the energy from one pit went into the other. So just something that it was a sweet memory for me because I didn't think I could remember that far back.
You need a silver soybean ratio indicator, like your gold silver ratio.
Anyway, I think they're both in bull markets. I never really thought that higher rates were going to create bear markets in the grains. People aren't going to stop eating because of, higher rates. Demand destruction at the table, I don't know. Not for me. You know,
No,
I'm
we've
not
got we've
going
obviously
on a
got the
diet.
Ukraine stuff, haven't we? Which is a big producer,
Yeah.
fertilizers and that. So you know, there is a bit of mess in the middle if you get my meaning. You know.
Yeah. Yeah. Anyway, grains look good. Even the wheat, you know, and that's a major Ukrainian crop that was affected by the war. Nice little base here. Just in case you're looking for other opportunities, looks like an ABC. And why can't we revisit these highs again? Um, so what are you thinking here currency-wise, Ryan, going into the big number? Again, now we're at the biggest number in the history of the markets. Seems
Since
like
the last biggest number, yeah.
last big number of, yeah.
It's
What
always
do
the
you
biggest
think?
number.
You think the Euros run far enough short term? Someone said there were objectives met, that we could get some type of pullback. Maybe it makes a new high and get some type of turnaround Tuesday after the CPI. Would you now be, if we do get a correction in the euro or the dollar, which I know some people had 107.50 for a target, are you a seller of the dollar on rallies back to 109 and perhaps a buyer in the euro back, say, par 40 to par if it was there?
Yeah, I think that's the way you got to look at it. You know, as Kay said, the sentiment might have changed. So, you know, if people are willing to sell the dollar a bit more, then if you
Yeah,
get a rally in the dollar, you've got to look at your stretch points. And on the flip side,
right.
if they you know, if they go and buy the dollar, or if you see like euro dollar dipping, then you've got to think about fading that move at least for the short term. But it's like we said on the flow show. You've got to look at it in three aspects: what the data does versus what expected, what that means for the Fed. Does it mean they're going to change, or does it mean they're not? And then what the market does with it. Because as we've been saying, you know, a soft number today doesn't mean the Fed are going to change their mind or start, you know, reversing. But there's some elements, as we've seen over the last few months, who are ready to trade that and ready to try and front run that possibility, and they keep getting spanked. So we know the Fed aren't going to change unless the inflation
Right.
drops to 2% today. The Fed aren't going to change. So if it's a soft number, you know, you got to think any dollar dip, you got to be looking at buying that if it gets to some whatever your key levels are that you've highlighted in your chart.
And hey, good morning, guys. I wanted to see if I can jump in this conversation really quick. I stepped away, but I was in the chat room earlier today. And good morning, by the way.
Morning, guys.
Yeah, good morning, Ryan. Dale, I guess you're there. Obviously, I think Kman's there. I don't know if anybody else is
I'm
around.
here.
But
good morning.
Stelios, good morning. Hey, you know, this is a great
And
conversation. I don't care about Steve.
Yeah,
Just
go
kidding.
away.
Glad to have you here, Steve. Glad he's here too. You know, this is actually a really good conversation. I want to jump in it. And I was in the chat room just a little bit ago talking with Kman about this, saying, you know, this shift that you're seeing in the dollar, this comes at a really important level. If you're looking at the euro, this is that 2022 you know, this is the trend line that's kept us really in check all year long. It's
Right
also
line.
a 618 fib. I mean, this is how important, in my opinion, this level is. So I want to ask you guys your thoughts here, because we've had such a nice rally in equities. We've had equities blew past this pivot that I was watching yesterday. We stopped there yesterday, and then obviously today we're going right past it. It's the 4110 level, which, you know, it's been a big pivot for quite some time. You can see it for forever and a day, actually, going back all the way to February of this year. 4110 has been a big level. Highlighted it yesterday. We hit it yesterday, stopped, and here we are moving higher. Great. Now, you know, risk appetite continues to improve. The dollar continues to you know, reciprocate by falling. But I got to ask you guys, if the stock market comes back under pressure, what is going to be the currency that's favored? Is it going to be the dollar, or is it somehow going to be the yen or something else? Because if we are, correct in our assessment that stocks are just consolidating before another drop going into this fall. As the economy continues to slow, employment starts to weaken, we start to see the stock market, stay below the 200-day moving average and head back towards, the yearly lows. If that's the case, what is the dollar going to do? And I want to ask you guys that, because this is very important based upon where we're at, not only in the euro, but also with the dollar just in general. So let's start off with Stelio, since you just kind of popped on there. What do you think is going to happen with the dollar in a risk-off environment?
Well, all else being unchanged, the knee-jerk reaction is always to buy the dollar. That's what the markets do. It will depend, though, on what the Fed is doing, what inflation is doing. So thing is a little bit more complicated. I think that if we see stocks dropping from here going forward, I think the dollar yen is probably going to be moving more in tandem with risk, as it used to. Remember,
which it's been interesting, because it's been mostly moving with yields and not with risk, right?
Yes.
Okay.
Yeah. But as I said before, these markets, they find correlations, then they lose them for a bit, then they find other correlations. It's very tricky to call something like that.
No, I know it is, but the dollar, we all know that when you lay it all out there and you look at all the dollars out there, and when push comes to shove, the dollar is the de facto risk off currency that people want to be involved in. So I think it's got to be realized as the euro moves back up towards this trend line. One of the other points I wanted to make, and then I wanted to go back to that question with Kman and Ryan, Steve, want to hear your opinion, Dale, yours too. One of the other things that I want to point out is a lot of people this year, and this is a lot of you guys on our ForexAnalytix team talked about this too, saying that at some point, the ECB, the Bank of England, they're going to have to play catch up to the Fed. What we're finding right now is the Fed has moved, obviously very aggressively. We finally had the ECB, the Bank of England start to move rates as well. But you guys in Europe, and I'm speaking directly to my ForexAnalytix team members in Europe and the UK, you guys are going to be faced with a pretty scary winter, as far as energy costs, as far as growth goes. So how are central banks supposed to continue to diverge away from the Fed? The Fed's terminal rate might be here, 4%, 4.25%. I don't know what, we're getting close, regardless if the Fed hikes 75 basis points next week and another, 50 basis points or 75, whatever it is, the following meeting, we're getting close to that terminal rate with the Fed. How in the hell is the ECB and the Bank of England supposed to play catch up here? And that's why I get a little nervous buying the euro at these levels, buying the sterling after this bounce, and we're coming right into resistance here. Now, can the sterling get back up to 120? Maybe. I just wrote it for the last, few days higher. It's been great, but I don't know if I want to try to, stick my neck out and try to sell, dollars down here. Okay. So let me go. I know that's a lot to talk about, and we have CPI coming up, but let me go to
what kind of
Kman, what are your thoughts here?
What kind of coffee are you drinking today?
I'm drinking some good black coffee, good black, and loads of it. So Kman, what are you thinking?
Oh, yeah, that's exactly what I said earlier. I understand this, the change in sentiment. My question is, for how long will it last? Yes, we are at a reasonably important level on the euro dollar right now, which held over the course of 2022. I really wouldn't rule out for it to break and go even back up to 103.5. As I was saying this morning as well, the battle for the parity was really at 99. We've tried several times, it didn't break, so now we are going back up, and medium to longer term players are managing their books, and shorter term players are riding this lower dollar as well. If you look at the interest rate differentials, it was all very much, I mean, reasonable for this kind of move to expect. My question is, how long will it last, in the knowledge that quantitative tightening is still doubling this month, and I don't know how it's going to pan out with the reserves at the Fed. That could be that at one stage volume takes over from interest rate differentials. But okay, I mean, in technical terms, because you guys look at charts all the time, I think it's not excluded that we break here and then we move back to 103.5 in the euro, and maybe see a move, why not, down to 140 in dollar yen.
Yeah, why don't we squeeze the market a little bit more, right?
We've seen a move in dollar yen from 139
that's a
down to
battleground.
130, and still made a new high, where
Yeah.
everybody was saying like, oh, this is it.
Right.
No, it wasn't it. So yeah, I understand everything, and I'm sometimes tactically also trading the dollar from the short side, but I don't think in the long term we can call it over yet. This
Yeah.
dollar.
You know, and I think you said it well there, Kman. You know, the battle for parity was really at 99 cents with the euro, and I think that was really it. I mean, I'm not, and I think it's very tricky. And I also need to mention that I don't think there's a easy answer here. You know, that's why it's more of a debate, and we'll kind of see what happens, I guess, you know, following the CPI, because the CPI is going to set the pace for what the Fed is going to do next week, more than likely. So, hey, Ryan, what are your thoughts here? I mean, you know, we haven't heard from you yet. So what are your thoughts? Well, we did, actually. I jumped into you guys' conversation. But what do you make of the dollar as far as a risk off, you know, proxy? I mean, you know, and should we even take that into consideration?
Yeah, we should take it into consideration. But like Stel says, these things can flip. You know, why is a dollar a risk off currency, or bought on a risk off basis? There's also the geographical distance between it and Russia and Europe. You know, if things are kicking off in Europe, where are you going to go? You're not going to go to Turkish lira. You're going to go to the safest currency you can. But it's like Kay's also said, you know, we're seeing yields holding up, and yet the dollar's still looking weak. You know, that again is another correlation breakdown right now. There's something different in the market to what we've got now. We can bat it around all day long. At the end of the day, you know, I'll come back to the old thing. You just got to trade your levels. You know, if the dollar's going to dump, it's got to break 140, 150 dollar yen, 140 in there as well, and then perhaps you've got a little proper change of trend. If we can't break those levels, then we're sticking in the range, and the prior bullish phase remains valid. Same goes for the euro. 99 downside, 103.40, 60 on the upside.
Okay.
You know, for trading it, don't have to get complex. Just
I think this is a good time to mention just really quick, while you know we've got everybody here. If you guys want to listen to Kman and Ryan in the mornings, I say in the mornings. For me, it's like at 1 o'clock in the morning, because it's 5 a.m. right now. But if it's, you know, if you guys are up in European hours, make sure you guys are listening to the Flow Show, so you guys can get ready for the, you know, North American trading session, the European trading session, and it's free to listen to Ryan and Kman and get their views of what's happening, because they had this conversation, you know, obviously while I was sleeping. So when we were here, I'm like, hey, Kman, I'd love for us to revisit that conversation that you and Ryan and Price Stelios had. And so it's really nice to get you guys' views now. But if you wanted them earlier, make sure you listen to the Flow Show. Steve, we haven't heard from you yet. Good morning, Steve, or good afternoon in Athens, Greece. So what do you think about the euro, where we're at? I mean, you're obviously in the Eurozone. And in Greece, what do you think about the euro at current levels? I mean, are you a seller of dollars? Do you buy euros here, or are you looking to buy dollars on this dip?
It's not easy. The euro is testing resistance at the moment, technically speaking. So obviously, I would not be buying on top of resistance. But there is a real danger of seeing a breakout today post CPI. And I assume that's going to definitely lead to another leg higher. Now, do I believe that's going to be something that's going to be long-lived? No. Even if we break to the upside, I do think we're going to see some follow-through. But I believe that you know, in time terms, it's not going to last long. Same deal with if we see an extension higher in risk assets following the CPI. I think that the market, if we see a weaker CPI than expected, might be happy with a slowdown, believing that the Fed is going to pivot fast. But I do think that the Fed is once again going to squash those hopes, and that's probably going to be the trigger point for the next leg lower in risk assets as well. So yeah, so I believe there is the potential for you know, an extension of the rally higher in risk assets and further pullback in the dollar, but I don't think people should be chasing that. I think there's a very good chance that you know, they're not going to last for much longer.
Great. Yeah, you know, okay. And so, you know, talking about risk assets, you know, let's talk a little bit about gold. You know, one of the things that for me, I like to, when I trade, I like to see confirmation signals, meaning that like let's say I was going to buy the euro today, which I'm not long euros. Matter of fact, I closed out of all positions actually just a few minutes ago because I'm coming into the CPI fresh without, and Dale, you heard it from me. I don't have anything open right now, which is crazy, right?
Yeah.
I'm coming into.
Will.
Yeah, I don't know, not ahead of the, not ahead of the data.
Within 15 minutes is my bet.
No, I will when it's when after the data. Yeah, after the data, I will potentially. But one of the things that I'm looking at really quick is gold, because gold, obviously we're at a 618 retracement. You can see it right here, right? It just like we're, you know, this is the previous 618 retracement. It's just holding. And this is a big level, but what's bigger is this this descending trend line here, because that's what's keeping us in a bearish wedge ahead of this like 1680 level. If we break above the 1750, you know, that's going to suggest that you know, gold's got a lot higher to go, which also would confirm to me that we'd see a move above this 102. That's my breakout point in the euro, guys, is really above 102. Above 102, I know that it's going to be squeeze city, and we can see a, you know, as Kman and Ryan, you guys and Stelios were talking as well, you know, that we could see a move higher towards 103, 103.50. I think that's entirely possible today on weak data if we get below expectations. Now, I want to ask you guys, what do you think is going to be a low print for the data? I'm going to pull up data flash here, which we got about 8 minutes. You know, headline CPI, we're looking at 8.1, you know, core CPI at 6.1. Those are forecasts that we can see right here on our screen. So what do you think is a low print for you? Whoops, shoot, I didn't mean to do that. Is a low print for you guys?
The problem we've got is that we've got two numbers to look at. You know, a lot of the core is something that often lags, but I looked at this morning. It led or it dipped off the high before CPI found its high. And that's interesting because it could mean that if it is lagging, we saw a little dip in CPI, but then it went on to a fresh high up at 9% before pulling back. The core has been pulling back since April from 6.5%. So it could be we could see some catch up in the core in terms of that turns higher, but CPI turns lower. And that's going to make it a bit more difficult for people to pull a trade out of it because of what you're going to go with, the headline or the core.
All that is nice and good, but people need to be cognizant of the fact that these numbers are extraordinary, right? We're talking about unbelievably high numbers. So even if we come below expectations, listen, the problem here is the following, right? The old adage for central banks was don't let the inflation cut out of the bag. Now, they just recently, because they needed to, change that, and they were like, oh, don't worry about it. You know, even if for some reason the inflation cut comes out of the bag, we can fix it very easily. And then they realized that indeed the inflation cut did come out of the bag, right? And it's more than obvious that it's not easy, because if it was easy, it would be something that would be doable within a matter of 2-3 months. And we now know, they've admitted that they're not going to hit their inflation target, at least within the next couple of years.
Yeah,
so,
I mean, it's going to be a couple of years from now for them to contain it, but it is starting to trend lower, and we're seeing
but
signals of it that
can't,
we're in some disinflationary type of environment now.
Yeah, I wouldn't call it disinflationary if you ask me, because I remind you that
disinflationary data that's coming out that's going to pull us into that environment. It's still inflationary right now, but the data suggests that inflation is going to continue to come down, right?
Yeah, this is just the rate that inflation is increasing with. Right. So we're not talking about undoing the damage. It's like being a cancer patient, having like cancer in 3 of your body organs. And now the doctor's telling you that, listen, don't worry, the cancer is spreading slower. It's not receding. It's not going away. You're not becoming better, but it's just spreading slower. Would you really be, happy with that? No, you wouldn't. The problem here is that they've done the mistake. Inflation is now more than 4 times their target,
which is cancer.
Yeah, which is political cancer as well, right? Because this is the #1 element that moves the misery index.
And now we're getting chemotherapy.
Yeah, and now we're getting chemotherapy
and radiation.
That's just starting to have some very, very slow effects in containing the way this thing spreads. So now
Dale's already been there.
Yeah, Dale has already been there.
And then surgery.
Yeah.
Hey, and now another round of chemo.
Steve, we got just a couple minutes before data. I got to look at some key breakout points. So
my point is, I doubt they're going to do the mistake of the second consecutive mistake of thinking that, okay, a little bit of a slowdown in inflation is enough for us to get, all cool and nice about it, because the situation is already out of hand. Yeah, and that's why I think the market is going to be disappointed again.
Okay, and one of the things we also have to think about. Let's just going into next week. Actually, here, let me pull it up really fast. I'm just going to show you really quick. So this is this is next week. That wasn't next week. This is next week. I'm on Forex Factory here just because I can pull up the chart really quick. So here's a chart of Fed funds rate, right? And we are expected that to blow out above 2.5% next week. We're expected to go to 3.5, and then 3 3/4, and eventually 4, 4.5, 4.25, something like that. Remember, their moves work in a lag, so that's why they expect that these higher rates and the terminal rate to be at 4%. That's going to eventually just slow all the inflationary pressures down, which that's probably what we're thinking. And so the markets are going to be a future pricing mechanism, and they're going to realize that the economy is going to be slowing. And that's why you have to start looking at the S&P and saying, I don't know if I necessarily trust these levels. So here, for the S&P, key level that I'd be looking at today is I'd be looking at this 4165. That's 618 retracement of the 200-day moving average rejection down to the 3900 level. That's going to be the 618. And if we get back below, my opinion is we get back below this 4100, 4090 level, that's going to be a pretty big, negative. So what we have right here in the S&P is we got this block that we're, kind of looking at, and, notice we're right in the middle of it. I think these are the, 2 fringes of that area that you need to be looking at. Dollar yen is actually hitting new lows. That's a trigger for me to actually be getting short again, but I'm not going to ahead of the data. But the dollar yen, I believe, looks like it's going to trade back to 140. We have the euro that obviously is below 102. Above 102, it becomes very bullish. Sterling above 117.60 becomes very bullish. That's a breakdown point. Remember, that's a really big pivot for the market. We pivoted off the channel support. That's why I got long there last week, and I'm already out of it. I got out of it yesterday around the 117 level. So some pretty big. What's that?
30 seconds.
30 seconds. So we got some data coming out. Let's get over to I'm going to put us on this chart really quick, and I'm going to put the dollar index right over here. That's not.
It's worth mentioning that the market the last couple of days have been trading as if somebody knows there's going to be a really weak number.
Somebody knows something about something.
5, 4, 3. Let's see.
Data flash.
Shoot.
8.3. This is stronger. It's core CPI 6.3. It's stronger than expected.
Okay.
Long Dale.
And,
woo, look at that
and
data.
here comes the disappointment.
Wow.
And here comes the disappointment already. So we don't even have to wait for the Fed. Core
Around
CPI
Tuesday.
Core CPI double the expected, 0.6 versus 0.3.
Well, I guess I'm glad I got out of my dollar yen shorts down there. Holy cow.
And that's it.
Holy cow.
Yields are breaking out. We're trying to.
Yeah.
Wow.
Now, needless to say, I think that a weaker number would be short-lasted because the Fed would explain again that they're far away from meeting their target. But in this case, that we have inflation surprising to the upside and being again very, very close to the recent high, I think there is no question about it. The market already knows the answer from the Fed.
Moves, guys.
And the answer is we're going to resume the course.
You know, the VIX was telegraphing this a little bit yesterday. It was up with the market up very strongly. It was kind of like there were people hedging for this event.
Yeah.
Yeah, dude, all I know is look, let's really quick, and I know you're bringing Tracy on here.
Yeah.
Look at that dollar yen spike back up, above the 143.50 level. The euro dollar back down to 101. Below 101.
Beautiful.
Sterling, I mean, it just fell off the face of the earth there.
Nice out, Blake.
Huh?
Nice out.
I'm glad I'm out.
Yeah, that's why I was saying nice out.
Yeah, thank you. It's a really, really, that's a scary.
I know. I remember everyone's trades, but my own.
Well, dollar mex. Wow, that's spiking up. There's some risk aversion. And man,
and Blake, I think the most important thing.
Silver's collapsing. It's down 12 cents. Oh, 13 now.
Look at
and Blake,
buy breaks.
Blake, I think the most important thing is that we have no reason not to believe that there's going to be a continuation, right? Because that was the path of least resistance. And now, once again, the market hopes and expectations are getting killed by data.
Dashed against the rocks.
Yeah. It's all right, guys. Well, hey, good luck today, and I'm actually going to I'm going to actually sell some dollar yen right here. Just believe it or not, and I'm gonna. There we go. Oh, geez, a little bit too much. All right, hey guys, want to say if you want to join us. Check out the Trader Funding Program. It's a way that you can trade our money. So this way you don't have to risk your own money. They are the sponsor of today's show. And there's several different account types that you can acquire. We have people that get into live trading environments every single week with us. It's an awesome way for you to not risk your own money and keep 75% of the returns and not take any of the risks. So check out the Trader Funding Program when you get a chance, and have a great interview with Tracy. Dale.
Thank you, Blake. Thank you, team. Another great day. We really prepped people for what we didn't know what's going to happen. So Paul Landon, nice short on your cable. Tracy, God, it's been a long time. How are you?
I know. Hey guys, how you doing?
Good morning,
hey,
Tracy. I just want to say hi before I split. Hi, Tracy.
Hey.
Hey.
Good morning, Tracy.
Oh, well, what a time to be on, right? After CPI.
Yeah, perfect.
Right?
Yeah,
perfect time for you. So you want to start with the dollar, Tracy?
Sure.
Okay. So, we had this initial break, very crowded trade. Is this just another pullback before, are you looking for new highs in the dollar, or are there cracks in the bull case that you might want to be selling dollar strength in the days or weeks ahead?
I don't know. I mean, really, at this point, I wouldn't be comfortable being in the dollar at all. I think we could definitely see more highs. That said, the dollar strength is starting to break things behind the scenes. And so I think,
for example, what's it break? Emerging markets?
Like emerging markets, yeah.
Okay.
So, and we're already seeing, the Fed already said they're going to test their repo facility. So, I think they realize the dollar strength is really going to start breaking some stuff. So what I do think is that there is a possibility they come in with some sort of intervention. So at these levels, I would prefer to stay out of the trade.
Okay, so you think the Fed may cooperate with Europe and Japan, kind of like a Plaza Accord? I know that's kind of been bandied about. Only the opposite. The Plaza Accord was because of the weak dollar, right?
Yeah.
So,
I mean,
okay.
I just think they're going to have to do something, right? And I think what you really want to be watching right now is the repo market, because they did announce earlier this month that they were testing that facility with a small amount. And so that leads me to believe that they think there's going to be problems, right?
Okay, so the intervention and the repo market, is that the facility they would use, or?
They would probably use the repo market, and they'll probably use the swap market, right?
Okay, all right.
So I would really be watching the repo market at this point. If you start seeing those spikes like we had, what was it, September of 2018?
Okay. All right.
I would kind of be watching that.
Yeah, dollar bulls would say, well, why would the Fed do that if they're trying to be restrictive? Strong dollars helping their case. Why would they turn around? Because they are concerned they'd have to be lender of last resort to the rest of the world.
Well, exactly, right. And you can't just, I mean, you can't just crush every other market, emerging market, because you're trying to crush inflation in the United States, right? I mean, you can't crush the world economy.
All right. As far as
the long and short is, I would be careful about being in the dollar here, right? Maybe, for a day trade or something like that. But as a position trade, I would be careful at these levels.
Okay. You're still an inflationista. I bet you remember the days when silver and beans traded together, or read about it. Do you make anything out of silver? The gold silver ratio really collapsed. Anything in the precious metals of interest to you on either side?
Not really. Not really.
I
mean, there just hasn't been much there, right? For, a year.
Well,
I mean, again, nice day trades, but for me, since I'm more of a position trader, it really, neither has really done a whole lot right now.
I think silver did something special, broke out from a falling wedge with a real nice follow through, and might be embryonic in my view, but and gold definitely lagging. So inflationista, copper, anything you like in the commodity arena?
I do.
Huh?
Yeah, definitely. I love base metals right now, because I think that, we've had a huge pullback.
Which
I kind of like that, but going forward right now, green policies transition is still happening regardless, because they're doubling down on it, of course, because it's not working.
They use a lot of silver and green.
But which also helps, right? It's just, I haven't done anything with silver lately. I know everybody's excited about it. I just personally haven't.
Well, it's the color of my hair. It's finally becoming fashionable.
But as far as base and industrial metals, metals for transition, I really like right now. We're also seeing China start some stimulus, right? Because their GDP has fallen so much because of their zero COVID policy, and their year-end GDP goal is 5.5%, which they're not going to get.
Right.
But, they're going to, we just had Evergreen say yesterday they're starting new construction projects. I think after the People's Party Congress, that's October 16th, where Xi is up for quote unquote re-election. I think after that, they're really going to have to do something to kind of save the economy towards the end of the year. And so, I do think, and in addition, we have supply deficits, across all of those.
I think they'll change their COVID policy. That's been the major drag.
I mean,
From
you're
0
gonna have to do
tolerance
something.
to maybe 20% tolerance.
Right. But I mean,
Yeah.
I think they're dead set. But again, we have deficits across, aluminum, copper, cobalt,
Yeah.
nickel. And so again, as soon as China kind of ramps up their manufacturing and construction again, even though, I know the argument against copper is that, their housing industry is horrific
Oh,
and
yeah.
collapsing.
Yeah.
But they are starting new construction projects and whatnot. And still you need, they're the world's largest EV manufacturer in the world. And that, EVs take a lot of copper. So
Yeah. Yeah. You going to buy an EV?
no.
I didn't think so. I just, that's why
I know I'm terrible. I like
I had to, I know.
I like my gas
I
guzzler.
All right, so let's get to your bailiwick, and it's kind of been a difficult trade, choppy trade, but smacks of a bottom for at least some type of decent rally here in WTI. What are your thoughts?
Yeah, I think so as well. Again, with the China risk, I think, and people are looking forward to the end of October when the SPR draws are done. The market's kind of been a little bit oversold. Again, if China starts wrapping up manufacturing, opens up a little bit, I think towards the end of the year, we could see a rally, even though it's seasonally not rally time. Usually in the fall, heading into winter, we see a bit of a pullback just because of seasonal demand trends.
Okay, and the European energy crisis, everyone thinks this might be expensive, even if we went back to 10 in that gas. What do you think is going to happen in Europe this winter, Tracy? Is it going to be
I think it's
as horrific as people are saying?
I think it's going to be pretty bad. I mean,
Okay.
they're discussing the problem is they're discussing all sorts of stimulus, right? And they're discussing power price caps and things like that. And all of those mechanisms are ultimately stimulatory in nature. So it does nothing to curb demand. That's going to be your problem. And so that just exacerbates further shortages. So I think regardless, we're going to see higher energy prices for longer.
Okay, and your thoughts on the Fed and what they may do at the next meeting?
Well, 75 for sure after today.
Okay. All right. And when do you think that they'll be into some type of hold pattern in 2023, that they're just going to try and get it to their terminal rate by year end?
I think likely so. I mean, that's what it's looking like. That's kind of what the markets are telling us that they're going to be doing.
And
so
stay there for a while.
I kind of think, yeah. And I think that, I think it's going to be a lot of what the market dictates. And it's going to be very difficult because as we see, even I thought that CPI would have been at least, what was expected. Just because we've seen gas prices come down and things of that nature.
Right.
Apparently I was absolutely wrong on that one.
That happens, to all of us. Okay. So, any interest in uranium anymore?
It's still, yep, I do like uranium. Actually, we've seen uranium spot prices are up this year over 20%. So, I still like that. Again, it's a difficult trade.
There's the ETF that Stelios is in.
So I mean, it's still, it's still strong. I'm on the equity side, but it's again, it's always been a difficult trade. So it's kind of one of those markets I'm in and out of because it's kind of wild.
So you'll trade it. You'll trade it. You're not
definitely.
married. You date it. You don't marry it.
Exactly.
You're so fickle. Anyways, how about crypto? Anything? I know I rarely even ask you about anything. Do you have any view on it?
I'm not, I think I have like one Ethereum that I've
for
had
the merge.
for,
You had to have one while they
no,
merge on the
I've had
freeway?
it for, I've had it since, I think it was at like $10. I haven't done anything
Okay.
with it.
Okay.
So
All right.
I've ridden it up and down a million times.
All right. Well, I think that we've covered anything that you want to talk about that I have forgotten to ask you about.
Not really on the, I think, I love the US nat gas market. For
Okay.
sure. So, I think even if you're, especially if you're also on the equity side, if you're just trading stocks, right?
Nat gas
Because,
stocks.
the US is poised to be the largest export nation in the world. And we're building
Okay.
out even more distribution capabilities. And so I think going forward, if you want to look at some of those equities that I have production and distribution capabilities, if you're on the stock side, I think those are good long-term investments.
So, I mean, how would you classify them, the nat gas, as suppliers or drillers, or
Yeah, I
like
like
you said?
producers with distribution capabilities. So like Schneer, LNG, or
Okay.
Oxy, or EQT, ones that have
Okay.
that are near, that have assets near, say, pipelines that go to the Louisiana basin. So
Okay, so that's a key element, not that they just produce it, but they're able to be
get
able
it
to
to,
distribute it easily.
right. So that's kind of what those kind of companies that I would be looking at if you are, for kind of a longer term portfolio move.
Okay, it was short, but to the point. We covered a lot of ground, and there you are. And that Tracy's, you can find a lot of Tracy's research here at Intelligence Quarterly. And Granholm does it again. Sounds like you're a real big fan of hers.
Huge.
All right. Well, I would nominate you to be energy secretary.
I would almost accept at this point if I could.
We have to get the right candidate and have you be considered. You're one of the best, and knowing what's going on, and you're really like a watchman for people in the financial industry, FinTwit and everywhere, with your tweets and your writings. And a lot of people count on your views and perspectives to give them clarity when there's a lot of fog. So thank you for what you do, Tracy.
Well, thank you.
Okay. My trading warrior sister, Tracy Shuchart. Follow her on Twitter. Be among the million that do, at Shy Girl, CHIGRL. Thank you, Tracy.
Thank you, guys.
All right, Trace. Talk to you later in the winter.
All right.
All right. So
look forward to it.
All right.
We'll
have a great
follow
fall
up and see what happens.
And have a great fall trading season.
You too. Thanks, guys.
All right. All right. That's a wrap, everyone. Turnaround Tuesday certainly turned out to be that way. And you could join the team in 27 minutes for the morning edge. Remember, don't just count your pips, count your, count blessings if you have any, and everyone could find something. Can you risk money in the market when some people are worried about their grocery bill? There's one.